So now we're going to look at accounts and their nature. So the 5 basic account types, assets, liabilities, equity, revenues and expenses, have their own nature. Assets and expenses are debit in nature, and liabilities, revenues and equity are credit in nature. Debits are amounts owed, whereas credits are amounts owned. This actually seems a bit contradictory, but it is actually right, because equity is what the business owners actually own, which is decreased by expenses and assets that belong to the business. And if you do some simple maths and transfer the other side of the accounting equation, you'll find it is actually true. For example, I own $10,000 in assets, but have a $5,000 business loan and therefore have $5,000 in equity. So you can see from there that it all balances out in the end. So in terms of equity, assets are actually negative to equity and something that is owed back to the owners rather than actually owned. So that's rather a long explanation as to why different account types are debits and credits, but understanding why this is the case is important. Just what you really need to just understand is that assets and expenses are by their nature debits, and liabilities, revenues and equities are credits. So when you know the nature of an item, what you need to remember then is that if an item increases, it stays the same, but if it decreases, it changes. So now we're going to look at just a first simple example. So if I receive cash from a customer of $400, we know cash is an asset as it provides a future benefit. It is also increasing as we received cash, so it's going to remain the same. So we know from the above that assets are debits, so the amount is going to be for $400 debit. However, if I pay the electricity bill for $300, we know cash is an asset as it provides a future benefit. But in this case, it is decreasing as we paid cash, so it's going to change. So we know from above that assets are debits, so the amount is going to be for $300 credit because it has changed. So how do you determine whether an amount is a debit or credit? Is all a process that you follow over and over again. So what you need to do firstly is identify what account type is the account. So is it revenue, expense, asset, liability or equity? What is the nature of an account? So is it a debit or a credit? Then you need to work out, is it increasing or decreasing? And then apply the principle, does that change the debit or credit, or will it remain the same? So being able to work through this successfully is all about working through that process. So make sure you follow the process, and you won't have to try and guess if an account is debit or credit. You'll be able to work it out for yourself. So keep encouraged too, as this is new material for a lot of you, and it's okay and expected to struggle with it in the beginning. But like a lot of things in accounting, the more practice you get, the better you get at it.